Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar, and today I'm joined by Mike Lee and Pete Renzulli, who are here to answer your questions live. But before we get to the first question, guys, what are your thoughts on how the market traded today?
Two different areas today. We had slowly creeping higher. It's almost like the market's melting up right now and not actually trending. Actually, a lot of questions in the mentoring room today about whether we're in a momentum environment or not, and it's very frustrating because we have these spikes to the upside, and normally what you'd like to see on a short-term basis anyway, you see some consolidation so you can lean into it a little bit and put the next trade on. We've been getting straight up and then straight down, and it's been frustrating. I think we hit this 144 resistance level in the spiders and didn't carry through, so I'm a little light right now. I don't have a lot of size that I'm trading. What about you?
Yeah, no, I agree. I spoke about it earlier today. I mean, 144 is resistance. We tried to make a high yesterday. Fed day, we rallied. You know, since the Fed from yesterday to today's lows, we fell about 20 handles. I mean, we had a big down move. So, you know, as of 3:30, we look like we were closing at lows, and there's a meeting with Obama this afternoon, and we popped 7 handles. So it's still very thin. It's all about booking those trades and booking your profits.
Now, JJ here says that his biggest trading challenge is finding the right setup trade and following it. And he says, you have so much noise, there's so many stocks out there. How do you do it?
I'll answer that. I mean, you know, JJ, it's a great question, and there's always going to be noise. I've been doing this for 12 plus years, but the key is finding that low risk, high reward setup. You know, that setup where you understand your risk, you're not just getting in for a reason. You know, in the momentum room, we constantly talk about your entry, your exit, and your target. You shouldn't just enter stocks. That'll control the noise. And also the level 2 isn't as important as was back in 2005. You got to be a little more, you know, disciplined with your levels, disciplined with your charts, and focus on a clean pattern. How do you figure that out? You know, that's up to you. There are tons of good patterns. You have to concentrate on the ones that you like the best.
If I could add a little bit, the question is in reference to game planning around all the noise that goes on in the market. And I think that a lot of traders don't have a structure for what price action should look like for it to be their A trade, so to speak. So if they don't know exactly what they're looking for, they don't know if it's there or if it's not. So when you do have a structure that says, if this happens, that means my best trades are available and I'm only going to trade those, all that noise goes away because now you're only looking for something as opposed to looking at everything and trying to find something. So I think you have to have a structure before you start the game plan.
I totally agree. I mean, game planning is huge. And also, I always game plan with an A list, a B list, and a C list. And, you know, that first 20 minutes, it can change. You can game plan on the fly like a hockey, you know, game. And you have to just really be alert with your ideas. You got to stick with them and trust them and not just jump around.
Could I ask you a question about your A, B, or C trades?
Yeah, go ahead.
Do you trade less shares on your B and C trades because they're not your A trades?
Absolutely. And I will also be focused a lot more, you know, into the A trade and be pumped up a little more. And that B, C list, because I make it like that, it calms me down. I know a C might be an unbelievable trade, but I'm not going to get in it believing that. It's going to have to happen.
Cool.
Now, Mike, Dieter Trader here says, great trade on Priceline today. He saw it in morning call and caught it with you. So how else do you use your game plan to find trades like that? How did you use it today?
All right, so Priceline, we were talking about it, you know, for about 3 or 4 days. We had a big, let me see, this, we had a big downgrade right here, okay? And as you can see, it had a gap, and for 3 or 4 days, it consolidated on the lower end of the range. And we kept talking about, and we talked about 620, you know, then 610, a little support, but around 622 this morning, it felt a little heavy. Look, every trade is helped out by the market. The market happened to be weak today. It doesn't hurt any situation. You find that good pattern. Sometimes patterns fail because the market might not be on your side. Maybe it didn't have time to digest. This was one that we kept talking about. I put it on today, you know, made about 10, 12 points on it. It's Priceline. It is thin. It's not something that I'm going to get max size in. I can't handle it personally, but that's what's great about how I understand the business and how I understand myself is controlling my size. If I got too much Priceline where it broke down, I might not have been able to handle it, and I might not have turned, you know, I might have turned that great trade into one that never worked out.
We actually talked about that in the active trader room today, and I actually told people not to take it because of this, the clear support there from mid-November and the 200 period moving average. So it's interesting, momentum trade versus an intraday position trade. The reward potential would have been looking for a little bit more on a little bit longer time frame charts, but your momentum trader fit the criteria perfectly. So it gets back to the last question and knowing the game plan before you put the trade on.
Yeah, and it's also like a CRM. I'll just pull up CRM real quick. You know, this week CRM was a really good trade for us in our room, but it wasn't a day trade necessarily. It was something that I focused on for 3 or 4 days before it started, and that's what's key. If you don't have an idea coming in that morning, you're probably not going to catch something. So constantly look over charts, write down ones that look good, bull flags, bear flags. I constantly in our room, you know, are building a portfolio of potential good setups. That's the key. None of us know what's going to happen, but you have to put yourself in that good, low risk, high reward chance.
Are those trades that are setting up what would be your B or C trades? So you're not actually trading yet, but there's something you might look at?
Yeah, there's 3 criteria. I look at size, I look at risk, and I look at if there's news, if there's, you know, major support. To me, CRM was an A play. It might be a little pricey for some, but it's tight consolidation. And when you see a breakout, you know, to me, this was an A play. You know, Priceline today was a B plus. It's the only reason why it wasn't A is because it is thin and it is scary for a lot of traders.
Should new traders be trading thin stocks?
No, I don't think they should. And if they do, that you have to understand your risk. And if you're willing to lose 500 and you get 500 shares of Priceline, you have to really say to yourself, I'm not willing to lose 500. You're going to lose 1,500 when you're wrong.
I basically had an argument with somebody for the last 7 or 8 days in the active trader room with newer guys who are telling me they don't know what their A trade is. They really don't know where they have an edge, but they want to trade Priceline, Apple, and Google, some of the most volatile stocks out there. They're saying, I don't know what I'm doing, but I want to trade the most risk.
Yeah, I mean, I'll just pull one more chart, then we'll get to some other questions. Today I had a really good short in Baidu today, and I don't know if it's a question later, but Baidu right here. Let me just go on the day chart. What's this right here? Here's the day chart in Baidu, and as you can see, I'm sorry, right
what
back
time
here.
frame you want?
Where do you go? 5 minute?
Yeah, just press 5.
Okay. So here's Baidu this morning, and you gapped up, and you see this wedge right here? I'm not the best with this E-signal, but if you look at here, this tight wedge was forming. I put on a trade at 97.10 with a 20-cent stop in Baidu. That's how low risk, high reward that you could find these high beta. 97.10 with a 20-cent stop. We covered 96.50s and 96. We don't have to catch the whole move. But to make $1 to risk 20 cents, I'll do that all day long.
We actually do have a question about Baidu here from JB, who said Baidu has had a great run this week. Where do you see it going from here? Okay, so the daily chart on Baidu, it had a really nice run. I think today was a little, topping tail rest for Baidu. I think now we see 94 to 98 try to consolidate. If it could hold 94, 94.50, this stock could form a little more bullish pattern, but all this is telling me is it's really just making, here's your high, here's a lower high, here's a lower high, here's a lower high, until it really gets above 97, 98. This stock is still bearish, and that's why I looked to short it today. 3, 4, 5 days up on a stock that just made 52-week lows is a great potential trade short. That next day.
I was game planning it today too, but I was looking for a little bit higher, 99, 75, that area. Rolled over a little quicker than I thought, so I actually had it in my plan, but didn't even trade it today.
Well, let's go back to Priceline for just a second, because we have one from JJ who asks, is Priceline still a short or go long with a stop at today's lows?
Yeah, I mean, JJ, I'm looking for possibly a gap down. I did not like that $5, $6 bounces, in the last 20 minutes of the day. It's very difficult. That's why it's thin. That's why I'm not comfortable getting big size in it. But just my opinion, it is in a gap. You could say 590 would be the gap fill. I'm not looking for 590. I'm looking for a break of today's low tomorrow morning. Maybe we get 602, 600. I'm out of my trade. I'm not greedy. I'm always booking profits. On the upside, if this stock gets above 620, 622, it just might be a failed breakdown. You got to be very, very smart with your prices.
What's a reasonable stop loss in Priceline intraday?
I mean, really realistically, you could probably risk $2 to make 4. You know, it's not something where you could lose 50 cents to $1.
You gotta get a little more room.
Yeah, if you're wrong in Priceline, you can get whacked. And I've been hurt plenty of times in this stock. It's not something that I go to every day. This was just happened to be a really clean setup that I've been watching.
And you guys were just talking about thin stocks, and we have Ben C. Banks that chimed in, and he asks you if you can explain what you mean by thin.
Yeah, it's actually interesting. One of the conversations we have all the time is the balancing act between liquidity and volatility. As a trader, you obviously want stocks to move enough that you're going to earn money on it, but you have to manage the downside first. And you want to, and this kind of gets back to the other question too about finding stocks to trade. I have a minimum criteria that I look for 2 million shares average traded per day, average true range of $1.50. That's how much you could possibly move intraday normally. Lack of liquidity increases your risk no matter how much share size you have. And we actually had somebody yesterday telling me, well, I only trade 100 shares, that's why I trade these thin stocks. I said, but trading 100 shares doesn't not make the stock any less thin. If you hit the bid and you happen to be wrong, you're still going to take it down $1 if nobody's trading it. If you're the only person trading it, there's no interest, so why are you in there?
Oh, that's a good point. I mean, my whole thing is thin is also about timing. You know, a stock like Apple in the afternoon isn't as thin as it is in the first 5 minutes or as fast. So if you don't want to trade a thin stock, you don't have to. It just drives me crazy when people, oh, I just got hurt in Priceline, I just got hurt in Yelp or whatever the case is. And these stocks, if they're too thin for you, what do? You don't trade them. And it gets me frustrated. Like, I just got hurt in X, ABC stock. Why did you get hurt in it? Because it was too thin or it's too pricey. Guess what? You don't trade them. And that's a big thing with discipline with this market.
I'm not even sure if we answered the question.
I have no clue. I'm thinking about how.
No, because we got into the trading. I guess to answer the person, like, how would they identify it being thin or not thin? If you're looking first in level 2, the actual quotes in level 2, if there's 100 advertised at every level, the stock is usually pretty thin, meaning if you had to get out in an emergency, you'd have to take somebody else's shares, and if there's not a lot there, that increases the risk. So at different price levels and on different routing destinations like ARCA or BATS or New York Stock Exchange, you want to see a decent amount of shares there relative to the share size that you have. So if you need 200 and there's 200 there, you can reasonably get out. The other way to recognize it is there's level 2, and then right next to it is time and sales, which is the actual transactions going off. So you also want to see the consistency and the persistency on either the bid or the ask, which is active buying or selling, to determine if there's urgency on one side of the market or the other. So you can see it in the liquidity with the advertisements, and then you can also see it with the actual trades that are going off, and that's how you can get a good sense of liquidity there.
No, that's exactly right. Sorry about that. Whenever someone says thin, I think mints, so I get very distracted.
All right. Well, here's one from Market Picker who says, Mike, as a momentum trader, how actively do you use level 2?
All right. It's decreasing almost every day. I was religiously a level 2 trader, probably up to about 2010. Now it's not as important to me. I've really just strictly using charts as confirmation, and level 2 is my protection. That's the best way for me to explain it. I use the level 2 as protection, not to get in. The chart's going to tell me what to do, but the level 2, if I'm wrong, I see some support, I could get out a half, I could do stuff like that. But I would say the level 2 is less and less important to my trading. How about you, Pete?
I think it's a trading tool to determine getting in or getting out of trades, like somebody's bidding a lot of shares, and like it used to be, Goldman was on the bid, you'd say it's well bid, and that meant something.
Yeah.
But I think you can use level 2 and time and sales at significant reference points, and specifically for breakout areas. If a stock is pushing up, and let's just say for argument's sake, it's $53 is the resistance level. If it gets up to that level, and it's, as I said in the question before, if it's not printing a lot in the offer where there isn't consistent buying pressure, you can literally use level 2 to say nobody's getting involved at this level, so you reasonably can expect it not to get through. But if you see the opposite, where there's a lot of printing going off, a lot of people are looking at the same thing at that significant level. For instance, like the spiders today at 144, there wasn't a lot of buying at that level, and we got the reversal the rest of the day. So I would use it exactly as you said, more to manage the downside risk, but you can also add something in there at a significant level, pay attention to it.
And the one thing, just to close on the level 2, I don't like teaching it as much anymore because it doesn't work as well. Why should I teach something that I'm decreasing, my everyday thing? Point. But the one thing about the level 2 is as important is prints. And I think you said that. You have to look at the prints. You could see if people are paying hard, paying through a stock. That helps me out.
And just so everybody, if you don't know what level 2 is, because a lot of people have a full-time job and they might not be watching it intraday, level 2, you see the trades that are actually happening that are either green or red. Green means somebody's actively buying somebody else's shares, and those consistency and with large prints means there's a lot of urgency of buying. Same on the opposite side, which would be red. So if there's a lot of red and consistent with the red, there's active selling, and you can get some clues, but like you said, not as much as it used to be when things were in fractions.
Yeah.
Now, what would you say is your favorite day trading pattern? That question comes from Jenny the Trader.
Mine is actually trading around the opening price. It's actually very, very interesting. We had a trade yesterday in Dollar Tree that set up pretty well. I don't know if we have the volume on here, but Dollar Tree, let me go out to the daily chart here. We actually had, oh yeah, you can actually see we had a monster spike down into a double bottom on Dollar Tree, and it actually opened up lower. After the stock pushed lower, the pattern that I always look for intraday is if it starts on one side of the opening price and then crosses back above, that's actually an entry signal. It's one that's very, very easy to recognize. So if a stock is in an uptrend but trading below the opening price intraday, and an alarm, you set an alarm at today's opening price is basically today's first print. If it's below there and trades above, that's the entry signal. And we had a nice dollar pop off of that yesterday in Dollar Tree.
Yeah, I mean, I guess my favorite pattern is one that works. That's what it comes down to. So just, pray that this one works. But no, the reality is that I love bull flags, bear flags, and wedges. Like I spoke about Baidu earlier, I love the tight consolidation because the tighter a stock is, the more understanding I have of risk. I'm about low risk, high reward. I don't enter stocks unless I have an idea of how much I'm willing to lose. And it's all about prices. If I am risking 20 cents and I get 1,000 shares, I'm risking $200. If I'm risking $2 in Apple and I have 100 shares, it's the same thing. You have to understand your risk reward setup. But on an intraday basis, I like around 10 o'clock, you have your up move or down move. It forms a nice tight bear flag or bull flag. And that 10 o'clock, 10:15 high of the day is very powerful and very successful.
I think it's interesting that we have over 20 years experience and we're spending most of the time talking about managing risk as opposed to how much money isn't that interesting?
Yeah.
You would think most people you talk to is how much money can you make, and we've spent most of the time talking about how do we manage the downside.
Yeah, no,
I think a lot of people can learn from that.
It's an extremely important thing. I mean, my rules that I put up on the website are just, 20 rules that I've put together throughout my trading career that has protected me and made me a successful trader. It's not just chart reading. You have to put everything together.
All right, here's one that says, it looks like there's a breakthrough failure on Google today. What are your thoughts?
Go ahead, Pete. You take Google. I don't like their products.
It's actually interesting because when I'm game planning the stock, we had an interesting talk today about pennants. Like you had mentioned one before in Baidu, it happened to be on an intraday basis. And the question is, how soon do you get involved in a pennant? Or in this window here, I would say we were going sideways for basically 10 days. And how soon do you get involved? Which we actually had another one very similar here at the end of October. I kind of do see a failure here because the way I walk people through and coach people through, whether it's a pennant, a breakout, a flag, whatever it happens to be, if it's not obvious prior to the breakout, I usually tell people to wait for a little bit more confirmation, whether it's a flag outside of that level, a close outside of the level, a couple of days. So in this case here, I think it is a fail. We pushed through, we got a huge topping tail, and we closed in the bottom third of the range. So I agree, I'd lay off it until it stays above that level with some conviction.
Yeah, and today I spoke about Google in the morning call. I mean, I saw the gap up, and I'm like, it has to stay above 710. I don't care who you are, I don't care what stock it is, when you see a bar this powerful, okay, on an earnings report, it's not gonna go up as fast as everyone wants it. This thing is so damn powerful, 760 to 640. It's just retracing 50%. It tried to stay up on news, it can't hold 710, 712, that's your area. And until Google's above 710, there's really no reason to buy this thing between 700 and 710. I always say a gray area. You want to get Google back here, 684, 685. It already had its move. I mean, look at this. I'll just zoom in here a little bit. Here's your bull flag. Here it is. It broke out. Look at this. Look to the left, though. This is so powerful. This thing's got a ton of resistance, in my opinion.
I did get long this once today. I waited for it to pull back $10, and I bid the previous day's high, looking for that to hold the support. It didn't. It took a loss and just went to the next trade.
Yeah. I used Google search today to check out where Apple was.
Nice.
So.
All right, here's one from Allison who says, please tell me about CF. Is it oversold? It looks vicious.
And it's probably the right word. It is vicious. I'll just give my take on this real quick. You had your breakout. I don't know, I forget who it was. It might have been Goldman that downgraded it. In one day, it took out about 10 trading days. To me, red flag. In this case, red bar. Here's your red bar. Couldn't hold up today, and it consolidated. Look where it's at right now. This thing took out, I don't know, 15 to 20 healthy trading days, and it's right back down. To me, that's something that I'm not looking for a bounce just yet. It has to form a downward pattern. It has to form either a wedge or a bear flag, and then it'll tell me it's ready to bounce. That's just my take on CF. I think this thing is in trouble.
If that pushes down into the 200 period moving average at 194, you bidding for it tomorrow?
If you see 194, I'll bid for it with a tight stop at this low, 192.50. But that's also something where you got to be cautious. I mean, 3 down days in a row. Scott and I always talk about these stocks that go down 3-4 days in a row, and he talks about red dog reversal, 80-20, whatever you want to do it or talk about. But that's a trade. So if you see CF gap down, you use the prior day's low for potential reversal. But CF is, this thing's it's scary. If I own CF at 215, you might not see 215 for a while. It has broken down. It has been vicious. That's just my take. I don't follow this stock that well, but this 2-day move is pretty nasty.
Well, other than a couple of weeks, it's basically in a trading range going back to July.
Yeah.
So you're in the middle of the range. There's really not a big edge there from a longer-term perspective.
And we talked about this sector earlier today. Here's POT. POT had a nice bounce, but came in the last 2 days. Look at Mosaic. I think Mosaic's the strongest one in the sector. Here's your V bottom with a bull flag breakout. But at least this one's above here. So if you're going to look to buy an ag stock, I'd look to buy Mosaic on a pulling rather than CF.
Have you traded Monsanto at all?
Monsanto, I don't follow it. MON?
Yeah.
Yeah, I never liked that company.
All right, moving on here. Chicken legs. Do you think Yum can fill that gap like Facebook did?
Chicken legs.
He's talking to you.
No, that's their name.
Oh. Yum. Yum this is like one of the better stocks for the year. I'll go up, let's just look at a monthly on this. I was looking at it today. Here's your monthly chart. Look at this uptrend in Yum. I mean, this has been an unbelievable stock pick for a long time. Why? Because of China. I was over in China a few years ago, and KFC and Taco Bell and Pizza Hut, I think those are Yum companies, I'm not sure, but they are popping up, and Yum got a big growth from China. And then you look at the daily here, it tried to get in the gap. So what I would do is draw your line right here, at 68, and anything above 68 with a hold is bullish. It did come down pretty hard today on the stock news of the market. And I think Yum is a little more bearish than bullish. Long term, you got 65.50 as support, 66 area, right into here. Here's Yum. So if you do like it long, sorry about that, 62, 62.50. But all the moving averages are still on the up.
I'm seeing a little differently. I'm actually seeing distribution up there. When you start to have these capitulatory type moves to the upside and you start to get whippy type price action, this is actually very similar to what we saw in Apple when it was up at 700. You start to get this capitulation move to the upside, and then following that, you don't really see any clean flags. Like if you take a look all the way back to 2005 up to now, most of the moves were very organized prior to the next move higher, and the one we're seeing now is a lot sloppier. So I'm seeing a little bit of distribution up here. I think I'd be careful on the long side here.
Yeah, no, that's a great point, Pete. Don't ever disagree with me again, but I do agree with you.
Well,
okay, chicken legs.
Yeah, chicken legs.
Well, we can't have a Q&A without talking about Apple. So let's answer David P. here, who says, what do you suggest as a good short entry point if Apple breaks down through the current bear flag?
Yeah, can I just give my take on Apple real quick? I talked about it earlier today. 555, okay, that's your resistance. It's forming a wedge. I was talking to Scott the other day. The psychology of this stock has changed on the street. For now, if it gets above 555, 560, everyone's going to say, oh, why didn't we buy Apple at 530? It just doesn't work that way. They don't make it that easy. So to me, you have a tight wedge. Here's your wedge forming an Apple, 555 above potential cover or go long, and below 520. I think this thing can be in the 450, 470 range if it can't get going. I mean, it is weak. It can't hold gap ups. It's down when the market's going down. It's not showing any relative strength. So to me, if the market does come in 50, 60 handles, I wouldn't be surprised Apple's not at 450.
How are you game planning with all those smaller type candles where it's opening and closing the last 4 days in basically the same spot? You staying away from it because of that?
You know, to me, Apple is a game plan on the fly. You know, how I talk about a stock on the fly, it's not going to make so much sense. If you say, I am buying Apple today, it doesn't work that way. You got to really game plan. You know, a good lesson for everyone is go out to lunch every day. Come back and just try it for an hour. You come back, you look at the charts you traded in the morning and see what's consolidating. Sometimes it's great to get up. I always say get up from your seat for a while because you start to lose focus and you're so caught up in the movement. Step back, see what Apple's doing, and find that great pattern. It's an on-the-fly type trade for me. We don't know if it's going to go today. Let me just pull up the one-day chart. Can you take care of that, Pete? Thank you. Okay, so here's the one-day chart on Apple. You had your gap down right here, okay? And just on a 2-minute, real quick, I don't want to talk about Apple too long. I'm not the best with these charts. Here we go. Here's your gap down in Apple, okay? And as you can see, it tried to fill the gap. So the first few minutes of the day was pretty good, okay? Came back in, double bottomed, looked like it was going to go lows. I heard a few people on the trading floor getting pissed because I just saw a $2 bounce, and here's your trade right here. I always talk about that 10 o'clock to 10:30 trade. That looks like a little wedge, a little more bullish, and you take your trade and you're done. And that's how I look at Apple. Take them and run. Don't get caught up in a $500 stock because I love the iPhone. Ooh, this new app came out, it's great. It's not about that. It's about booking profits and taking your trades.
As a momentum trader, how is that move at 10 o'clock different for you from the one at 9:30? They look like the same thing. Was it because it flagged after that?
Because 9:30, I don't have my support. You see that support, Pete? I have some tails here, a little trading range from 532 to 534. I'm getting more support. I suggest everyone for the first 10 minutes, either don't trade or trade as small as you can. It is helping my business out tremendously the last few months. I used to be amazing at the first 5-10 minutes. The market's not allowing me to be who I want to be, so what I have to do is change. And that's the key to a market.
Adapt. Pete, how do your thoughts about Apple compare?
I'm staying away from it right now because essentially what we're seeing is we had the huge push down mid-November, and something interesting that came off of that. You often hear the terminology short covering rally, and most people really don't understand the difference between short covering rally and new buying. New buying is generally slower off the bottom, and a short covering rally is a fast spike because you have people that are short have to cover to get out of it. And we actually kind of had that. We went from 505 to 595 very, very quickly. So essentially what that means from a trading perspective is the preceding downtrend is still there because it's labeled as a short covering rally based on how fast it was. I still like it short, but I don't want to short into this support. We've bottomed out here now 4 different times. So I'd like to see it get below 500, flag below 500 before I started to look on the short side again.
MP, as a mentor, okay, let's say I'm 3 months in the business and everyone's trading Apple. What do you tell that person who, oh my, look at that.
You're in the business 3 months?
Yeah, and that person, oh, look, that guy just made so much money in Apple. Can I trade it? Why am I not trading it?
I tell you to watch it, print out the charts, but don't trade it until you understand what you're doing.
Okay.
If I'm doing my job as a mentor, I'm teaching you how to last so that you can eventually get to the point where you trade that.
And if you're not having success in Apple, do you force it? Do you get married to something that you...
Very good question. Most traders don't read their P&L to see which stocks they're making or losing money, and they just keep going back to the same ones, and it's very important. Sometimes it happens just because the stock goes to a different price level. Like a stock, like, let's say for argument's sake, trades normally between 20 and 30, and all of a sudden it gets to 50. Maybe institutions get involved at a different level. Maybe the earnings change differently, and it'll trade differently at different levels. So just because it's the same stock, it's not mean you're going to trade the same way. So you got to pay attention to your P&L.
No, and I asked you that question because, you know, check the website out, check my rules out, and the momentum room, we're always talking about discipline. And I don't want to talk charts right now. I just want to tell everyone how important it is to have rules, to come in with a good head, come in with a game plan. Don't force a trade. Be patient. Respect the dollar. These are all things that will make you a good trader. I could teach anyone to look at a chart. It says, oh, this one went down. Why am I not shorting it? There's so many more factors.
That's also the power in the mentoring. We're actually doing it while the market's unfolding. Anybody could tell you 9 o'clock at night what you should have did at 10 o'clock in the morning, but they could actually see our positions when we're doing it.
I'm not a Monday morning quarterback. My mom's not going to tell me, Mike, did you short Apple today and you make $10? It's not like that. I'm going to tell her I shorted Priceline and made 15 points.
Interesting point. If I could just finish with one thing. We had the webinar last night with John Najarian and Scott. And listening to the webinar for two people who actually trade, it's very interesting because you'll be able to tell somebody who's teaching you who actually trades, because when they go through explanations, they talk about how they made or lost money. Somebody who doesn't trade but teaches, you'll hear them talk about, well, it's the flag, it's that, and everything like that. So you could actually pick up on whether somebody actually trades by how they're teaching it.
Yeah,
it's interesting.
And I always say, Steve is my partner in the room, we are traders first. We are traders first and then mentors and teachers. And I think because I have such good experience and good control of my own trading career, it's made me an incredible teacher. And I really love teaching because it's helped my own business. Yeah,
you basically keep saying it twice. It's hard to break the rules if you're telling somebody don't do it.
Yeah, it kills me. Why? And then they ask, Mike, why did you buy Priceline if it just broke down? And I'm like, you know what? That kid who I never even met before, who's on a trial, who's in Lincoln, Nebraska, who just graduated school, is telling me, you know what? I broke my own rule, and it drives me crazy. So.
Well, we got away from stocks there for a second. Let's jump in and answer a couple more questions before we're out of time. Let's talk LinkedIn. Market Picker says LinkedIn topped out at 115. Would you look to buy potentially back at 110-ish?
That's the only place I would look for it. Actually, a little deeper than 110. I try and get it closer to the 109 level where it just broke out from. What about you?
Yeah, I mean, LinkedIn is one of those stocks I don't get yet. It has had unbelievable earnings throughout the year. It just can't get going. I do like LinkedIn. I think their business is doing well. As a fundamentalist, which I'm not, I just read, so I'm just answering. As a fundamentalist, I like it. As a technical trader, yeah, 105 to 110. Anywhere into this meaty, channel bullish flag, I do like it, but it's a volatile stock, and we know that, the ranges can be drastic. I wouldn't be chasing right now. I don't think you need to own LinkedIn until it really closes above 115 for a nice, gap and go potentially, to trade above 125. If I was picking a stock, it might be a little more on the aggressive side, but I think LinkedIn could be a really good potential trade next year. This year it's consolidated on good earnings. It's done a lot better than Yelp and Groupon and Zynga and even Facebook. So in the social media world, I think it's getting better. I think, Headhunters is turning into LinkedIn. And I finally got a LinkedIn account the other day. I never liked the site.
Are you on Facebook yet?
Matter of fact, I just got on Facebook, and my sister-in-law's dog is on Facebook now.
Nice.
So that's
nice.
I have another new friend.
All right, moving on from that. Manajad says, I want to know your opinion about Dunkin' Donuts.
Go ahead, Steve.
Steve.
I don't know. I forgot your name for a second. It's so hot in here. I'm like, I don't even know who
exactly.
I am.
If I'm game planning this, I'm pretty much telling everybody it's in a 5-month trading range. Let it get out of the range. You're just going to get chopped up. There's two different strategies here. You want to let it get out of the range and possibly look for a retest at 35.75, or you actually do trade the range. We're kind of near the top of the range right now, other than the one little spike in October. So you're either short selling this resistance here, looking for it to pull back to 29 with a tight stop, or wait for it to get above 33, looking for 35.75.
Yeah, I mean, Dunkin' Donuts is to me, a perfect. Look at this. You have high, lower high. You have a low and a higher low. So it's really getting a little tighter, consolidating. I agree with Pete. It's one that I haven't looked at in a long time. Maybe on earnings day you want to check it out. The volume isn't that great. It's not a good day trade. As a long-term hold, if you're in it, you give yourself to maybe 30 on the downside. But on the other hand, you don't want to hit out lows. So, this is one I'd probably stay away from.
And what's your read on Sina? That comes from Brett34.
Brett34. All right, Sina is like Baidu. You want to short rallies for now. Do you agree with that, Pete? Finally?
Yeah, but both of them,
great.
I was waiting for it to push a little bit higher, though. I was looking for both of them tomorrow. They caught me off guard today by coming in, so I game planned for them, but they didn't do what I wanted to see on the open, so I stayed away.
But look at this trade since like Halloween or whatever, not even Halloween, late September. I mean, this was a $65 stock. It went to almost 40, 45. I mean, that thing got crushed. Chinese stocks got hit. We know Baidu went down. We know Sina went down. To me, Sina is a short on this trend line. All the indications is telling me it's still a short. And I do agree with Pete. It could bounce up to this area. That's probably where you're looking to fade.
Yeah, that's what I was looking at, yeah.
And I agree with you. You know, we could have got a little more oomph today. If the market didn't sell off, I think Baidu and Sina were ready to go. But just look at others, like Nates real quick. Nates is another Chinese stock. Look at these things. So to me, it's not the most bullish sector. And as a trader, one tip, I'll give you a tip before I head home. Write down a list of stocks that are bullish on the daily and bearish on the daily. And if you come in the morning and you see stocks that are strong and the market gaps down, these are the ones you want to go for, not the weak ones. A trader told me the first week I was in this business, buy the strong ones and sell the weak ones. And it really is true on the daily and also intraday. And that's why I was looking to fade Baidu. It bounced.
I had the same conversation with somebody in the mentoring room today who wanted to short sell one of the strongest stocks out there. I don't remember what it was, but I'm like, you're not going to make anything and you're not going to lose anything. You want to short sell stocks that already have selling, like the 3 charts you just showed.
Yeah, and real quick, Brittany, as the hardest thing to do as a trader, as a mentor, as a trader, and as a teacher is to not short stocks that are exploding high and not buy stocks that are getting killed. And the easiest way to do it is just don't get involved. And if you do get involved in a stock that's getting hit and it bounces a little bit, you better have such a discipline out. That low of the day is your out, because you know what? If that low breaks, where's your out? And when you don't have an out, your mind plays tricks on you, and that's what this business is not about.
That's a good tip. Okay, a couple more big picture questions here before we go. DTIM Trading says, do you also use the intraday moving averages as support resistance?
That's a really good question. I actually don't use the intraday moving averages as support and resistance, but what I do use them is for intraday trends. So for example, we have the 8 and the 21 on most of the charts. I don't say it's attempting to get to the 8 or the 21 and I'm going to short sell or buy in that area, but what I do say is, for example, today the 8 was below the 21 most of the day, so I'll say as long as that's still the case, I'll continue to look for shorts.
Yeah, I'll be honest with you, I don't use them intraday. I use the 100 and 200 day on my dailies just to get a feel. But to me, charts are meant to be broken, right? Bull flags meant to be potentially support breaks, resistance breaks. So when I get these moving averages, sometimes it gives me that opinion that I don't want to have. Sometimes a great support level is broken and you could get short. You know, that's how I look at things. I'm always looking for that clean, low risk trade. The moving average to me are important for some people on how they trade. For my style, I'm looking at support on charts more than the moving average.
Which ones do you use on your daily? You don't use them intraday. What do you use on daily?
100 day and 200 day. To me are important, just like Priceline today broke the 100 day on the downside right here, and you see how the moving average to me was important at that 620 area.
All right, Vindog here says, what's the anatomy of a gap fill? It acts as resistance, but then it looks to be filled, like Scott said on Netflix this week.
My rule on gap fills is I usually give it 3 days to fill the gap. If a stock gaps up and doesn't pull back within 3 days, then to me that stock is still very, very strong. If in my opinion, if it fills sooner than the 3 days, the gap didn't mean anything to me. We actually had a talk the other day about an exhaustion gap versus a continuation gap, and I usually will give it 3 days to determine which one of them they are.
Hey, gaps, see the problem is that generally gaps are either on earning days or news. There's really, unless the market really gets hit, that's the only reason why gaps happen. So generally if a stock is gapped down, I don't see, what gap is he exactly talking about? Here's a gap in Netflix right here. Okay, this goes back to July, and it finally got above it, and we were looking at, this is a gap, okay? I don't know exactly what happened this day. It could have been earnings. I don't have any clue. You know, I don't know that day exactly. But look what happened here. And this is the problem with these high beta stocks is news. Okay? no one knew that Disney was going to put a play in on Netflix this day. I was talking to Mark that day, and Netflix is broken. We were saying this stock's done for a while. The next day, not only it's not done, the stock went to 88. It's just, you never know. Equities are difficult on the overnight game in high beta. That's one thing I don't suggest anyone doing, is trading the overnight game unless you really got confidence in the intraday game.
Or deep pockets.
Yeah.
All right, I think this is our last one for today. We have one from Market Picker for both Mike and Pete. What would you say is one of the most important aspects of a successful trader that is consistently profitable?
Go ahead, Pete. I have to think about this.
It's a tough one.
Trade within your resources, meaning you mentioned Apple before, Google and Priceline. And all the mentoring that I do in the active trader room, it's always geared around what are your resources you're bringing to the table and what size business do you want to run. And most people immediately, Brittany, go to my resources, my capital. But there's how much experience do you have? That's a resource. How solidly did you plan? That's a resource. And the weaker those things are, you don't want to try and run a monster business, meaning more risk, in the high beta stocks, if you don't have the resources to run that type of business. So I think to take it to the next level, or to learn even just to be consistent for that matter, you have to make sure that you're opening the business that you're capable of running, and that's experience, capital, and planning. I think to me, that would be the best advice I would give somebody.
What would you say, Mike?
Yeah, I mean, just to add to that, I think first you have to figure out who you are, who you want to be, and how long you want to do this for, because this is not something that's going to happen overnight. This is a skill, and it also can be a business, but you have to treat it like a business for it to be a business. And you have to be confident, you have to come in feeling good, believing in yourself, having rules, like Pete said, understanding your risk, understanding how big a business you are, not getting caught up in the person next to you, hearing, oh my gosh, this guy made $50,000 in Google long today. Why am I not doing that? There's always going to be someone who's more successful. Well, no, I don't even say more successful. Makes more money or makes less money. But what makes you successful is hitting your goals, sticking with your rules, and having fun with your life. And that's how I approach this job. And that's what I believe in.
All right, well.
Good answer.
Thank you,
Go,
Pete. That was one of my best answers in a while.
That was good.
That was really good.
That was good.
Way to go out on a high note there. Any closing thoughts today?
Yeah, I think for the rest of the year, my personal trading plan right now, we actually had the Fed day, and in my game planning, I don't trade actively on Fed days or option expiration days, and those are very calendar specific. But I think everybody should really dial down their risk a little bit now with the amount of headline news we have right now with fiscal cliff, with the holidays and everything. There's just going to be a contraction in volatility and the amount of people being involved. So it just, in my opinion, it doesn't call for taking more risk right now. Maybe some individual trades you might be able to find here, but I think that's a solid plan for the rest of the year with all the stuff that's going on.
Yeah, I mean, I agree. I'm looking at the calendar today, and I'm going away for Christmas to my wife's family, and then I'm going on a little trip to Puerto Rico, and I'm like, I have 5 trading days left in this year, and what I'm not going to do is stress. I'm not going to get caught up in, the fiscal cliff and Apple breaking down or breaking up. I'm just going to trade to make a little money, to get myself prepared mentally, and prepare myself my goals for 2013, and just treat it as a year. Hey, my opinion, it's going to get good. Trading is always going to be here. It's only going to be as good as what you make it. Your planning, your stock picking, your discipline. You're not trading pre-market and getting hurt. And this wasn't my best year, but it was a good year. And next year, to make it better, I got to do things to make it better like everyone else. And just don't stress out. Don't try to make your month in 2 days. Don't try to make your year in the last 5. 2012 is over. It's 5 trading days, 6 trading days left in the year. Get ready. Get ready for 2013 and make it a great year. So.
All right. Well, great job today, guys. Thank you all for your great questions. Meet us right back here next week for another Q&A. Have a great night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.